Do you think you're eligible to do Roth conversions with your IRA? Hi, I'm Doug Ray, president and founder of the Wealth Guardians and the Ray Financial Group.
And I'm Brice Payne, and you've entered The Vault, the Wealth Guardians video series on all things pertaining to retirement planning. In this episode, we're going to cover 8 common misconceptions about doing IRA to Roth conversions. I want to bring your attention to these little like and subscribe buttons down below the screen there. Go ahead and click on those if you want to catch future episodes of The Vault with Doug, Garrett, and myself. And okay, Doug, let's go ahead and jump into it. We're going to alternate these 8. You take one, I take one. Okay. I'm going to throw the first one at you here, Doug. Not everyone is eligible to convert an IRA to a Roth. True or false?
That's false. Everybody who has an IRA can convert that IRA to a Roth. The big misconception here is contribution and conversion. Not everyone can contribute to a Roth. That does have income limitations, and how much you can contribute is limited also. But you can, if you have an IRA, anybody can contribute or convert to a Roth.
Okay, very good. That's easy to dispel that myth right now.
Yep. All right, Brice, this one's for you.
Okay.
Misconception number 2. There's a limited number of dollars that can be converted each year.
So that is false. There is no limit to how much you can convert in a given year. Having said that, you want to do your IRA to Roth conversions in a sensible way. You can blow yourself out of a tax bracket and from the 12% tax bracket into the 36% tax bracket if you are doing too much in a calendar year. This is why you really want to consult with a financial planner who can help you figure out how much of an IRA to a Roth conversion makes sense for you in that year. It's not just about the taxes. Converting too much, because that is a taxable event, could knock you up into a higher Social Security tax bracket if you've already filed for Social Security, and just as importantly, into a higher Medicare tier as well.
Yep, that's exactly right.
All right, so now we're going to go to number 3. Misconception number 3, Doug. If you inherit an IRA, you can convert it to a Roth IRA.
No, unfortunately, you can't do that. Secure Act 1.0 back in 20 changed the rules on inherited IRAs, sometimes called beneficiary IRAs. A non-spousal beneficiary of an IRA now can not only not convert it to a Roth, but they must take all the money out of that inherited IRA in a 10-year period of time. I wish we could do that.
Right.
But we can't.
Nope. Okay.
All right, Brice, this one's for you. Number 4.
All right, here we go.
If you're under 59 and a half,
okay,
you cannot convert an IRA to a Roth.
No, absolutely false. There is no age limit on what you have to be in order to convert, just like there's no income limit or dollar amount limits. Doesn't matter whether you're 2 years old or 100 years old. If you have IRA monies, you can convert them. I don't know how a 2-year-old would have IRA money, but if you have IRA money, it doesn't matter how old you are. You can convert it to a Roth at that year if you wanted to. You don't have to wait to be older.
Exactly.
Okay. Doug, you ready?
Yep.
All right. Number 5, taxes on Roth conversions are due immediately.
Totally false.
Okay.
What's going to happen is you're going to get a 1099-R on the amount you converted, and you're going to settle up with the IRS the next time you file your 1040, typically April the 15th of the following year.
So let's do that calendar year, but I mean, not that calendar year, that tax season, that tax year, but not do it the moment that you do the IRA to Roth conversion. Okay.
All right. You got number 6 here.
Here we go.
A Roth conversion can be done anytime and up to tax day of the following year.
I just kind of already leaked into this one. So no, it is not. You cannot do an IRA to Roth conversion up until tax filing. You can do it up until December 31st of that year. So it's got to be done in the calendar year. This gets hokey because contributions can be done up until April when you file your taxes. But because contributions and conversions both start with the letter CON, a lot of people get these confused. Conversions have to be done for whatever reason by December 31st. And I will say this, Doug, this is really unhelpful thanks to Congress and the IRS, because you would love to be able to do an IRA to Roth conversion up until when you file your taxes, because that's when you have a good idea as to how much you could do up to that tax bracket. So if you're doing it by December 31st, you're kind of guessing at what tax bracket you're going to be in, and you're kind of ballparking it. So it would be great if you could do it up until tax filing season in April, but you can't. You got to do it by December 31st.
Bryce, you're exactly right. It would be, and thanks to Secure Act 2.0, there's no more redos for Roth conversions.
Yeah.
They're permanent.
Yeah, you forgot to add in this other income that you had, and all of a sudden that IRA to Roth conversion wasn't 12% in taxes, it was 22% in taxes. Can't go back and correct things.
Right.
Yeah, that's a rough one. All right, Doug, number 7. Here we go. Required minimum distributions can be converted to a Roth IRA.
That's a question we get asked quite a bit.
Yeah, that is.
I wish it could be, but it cannot. Absolutely not. Listen, what's going on with the required minimum distribution is the IRS has let you grow monies in your IRA tax deferred all these many years. The required minimum distribution, which most of you now have to take at age 72, basically says the IRS now wants to get some tax money out of that. They're not going to let you take a required minimum distribution and convert it into a Roth IRA, so then it grows forever more tax-free.
Right.
Sorry, folks.
Yeah, and the whole reason that you want to do, or one of the main reasons that you want to do an IRA to Roth conversion, is to limit how many RMDs you're going to be taking in the future anyway. So that's one of the main benefits of doing an IRA to Roth conversion. Okay, thank you, Doug.
All right, Bryce, last one is for you.
Let's do it.
This is misconception number 8.
Okay.
10% early distribution penalties do not apply to Roth IRAs.
Okay, that is false. You do have to be over 59 and a half to take a distribution from your Roth. So if you're under that, you are going to pay that 10% penalty. And also we have to differentiate the idea between the growth on the account and the principal that you put in the account.
Correct.
So you can always take out, after you're 59 and a half, the contribution that you made to the IRA, but you have to wait until 5 years to take out the growth.
So let's say that again.
I might have met, you don't have to be 59 and a half to actually take out the principal.
The converted part, because you already paid tax on that.
Right.
But you do have to be 59 and a half or older to take out the gain, plus with 5 years worth of seeding time in it, it comes out tax-free.
Right. So well said. So it can get a little bit complicated there. Roths are a little bit more complicated animal than the IRAs are when it comes to what you can take a distribution out and what you can't and how old you have to be and all of that. But anyway, that covers the 8 most common misconceptions about IRA to Roth conversions. Doug, you want to take the opportunity to throw a 9th one in there, or do we?
I think we've covered enough.
Did enough? All right. Well, thank you for joining us on this episode of The Vault. Again, don't forget to hit these like and subscribe buttons down below if you want to catch future episodes of The Vault with Doug Garrett and myself. Always want to remind you, financial plans do not create themselves. I'm Bryce.
And I'm Doug.
And this has been The Vault.